G'day everyone, welcome back to Pete's Investing, June 23rd, 2023. We've got the British pound US dollar currency update. We're in a bullish momentum on the weekly and daily. However, we've broken down into a bearish momentum on the hourly as well. It's broken out on a bearish divergence on the hourly and broken through our entry parameters, and I'll cover that in a minute. First off, on the weekly, you can see there all indicators, the triple moving average of the price chart, the moving average of the CCI 150, and our new oscillator, the multiple moving average oscillator, is broken above the zero line, so it's giving us this bullish momentum. But notice it's hit this 61% Fibonacci retracement on this wider range on the weekly, and we've got a bearish candle this week. So just be careful about going long, even though the weekly is indicating so far a bullish momentum. We may have hit a minor resistance there. On the daily, you can see they're more clear. We've set that resistance at 128.42, and it's bounced down from the previous few days. And you can see there the CCI is turning down, and the oscillator, the moving average oscillator, is also starting to turn, but it's not quite turning down yet. So it's giving us this bullish signal. So just avoid going long at this point, I would suggest, until we see more of a upswing on the hourly. Now on the hourly, we did in our last video, that's where the dotted line was, we did project this bearish divergence on the CCI versus a bullish divergence on the price chart, and we did say we drew the parameters. So we basically draw a channel between that divergence range, and that's what that channel indicates. Oops. And we then draw, so we said if it breaks below this channel, that's the entry point, and it's entered there in the last few hours. And our target was going to be the closest Fibonacci range outside of that channel, which happens to be the 38% to the 50% level. So to be conservative and careful, we choose the closest Fibonacci range. Of course, it may drop further, or of course, it may even not get to that stage. So at this point, it's looking good, and that'll be our initial target area on the hourly. Now, for this to fail, as I always say, we need to see the CCI break to the upside and break higher than that point there. So the CCI needs to come up to this area somewhere for that to fail. As well, we need to see the price break to the upside, and if that CCI goes up to that point, we probably see the price as well break above that resistance line. But at the moment, it's looking like a very high probability of dropping lower, and very likely it may get to this Fibonacci range. We'll keep an eye on it in the coming hours. Now I prefer to use the divergence as a potential area to get out of position. So if you're going long, for example, so again, looking at the weekly, daily, and hourly, if you're going long in the last few days, and you're going long during this period, and saw this divergence, that's where I look at it and get out of long positions, especially if it starts breaking down towards the lower channel, and that's where you would exit the weekly, daily, hourly trend trade. And that's what this back test up here demonstrates, the going long positioning versus going short. And you only go long and short, again, to highlight, when the weekly and the daily are aligned. So only going short when the weekly is short and the daily is short, and only going long when the weekly is long and the daily is long, as well as the hourly. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also do weekly scans of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.